Good evening, all. I'm Epstein, and here we are with your metal market wrap-up. And this wrap-up is for Tuesday, the 5th of December, 2023, 6:15 p.m. Central Time. So let's go right to it. What's going on in the markets? Pretty simple. Consolidation. Yesterday, you had a range in gold that was $100 from the top, and then it crashed. Today, you got a little bit lower. The market came back up, and now the market's looking for its footing. You'll see where on the charts. Is there anything big happening right now? Well, yeah, during the week, there is big because we're getting all kinds of jobs data. And we've had the jolts today. Now we're going to get the ADP, Challenger Gray, and then at the end of the week, the full U.S. jobs report. They're expecting 180,000 jobs. But that gives us an idea as to what the market's doing. And the jolts report today saw another decline going down about 700,000 offerings of jobs. And that's just what the Fed wants to see. So the idea there is interest rates fall. As the interest rates fall, in theory, you would think that the dollar would break. It didn't go that way today. The dollar was up even with that taking place as the dollar's trying to figure out what's going on. You're right at the beginning of the month trying to figure out what is the next direction in the market. And that's what the battle's going to be all about, because one after the other, central bank analysts are coming out and saying, no. First quarter, second quarter, massive amount of rate cuts. We're talking 125 basis points to 150 between what the U.S. and the ECB is going to do alone. So it just gives you an idea, each one, as to how aggressive traders are getting. And that is supportive to the stock market to a degree. So when we look at the gold market, you can see you're in a correction. You're down 2.5% at the current price for the week. The market's still over the 18-week average of closes. That huge decline yesterday, boom. Now the market's trying to figure out what to do with it. When we put the swing line on the chart, you can see you've got a lower. Well, let me say it the right way. You have a higher high, and then you made a lower low. Actually, that happened yesterday. You don't see $100 breaks on this chart. This is beyond rare. It's extreme. But it's extreme for a reason. You also weren't up to 2150 at any other time. So as you get to new highs in gold and you're making new historic highs, yes, that's what's going on. As the market moves from the 1800 level to 19, from 19 to 2000, the range changes, the correction size. A 5% correction example when you're 1900 and a 5% when you're 2150 are very different. And that's what you always look at. And in this case, it was one heck of a correction. The market down $10,000 a contract from high to low. And what I know happens, having owned a brokerage firm for many years, decades, okay? I think I've had my own firm since 1984, divisions within firms since, I think, right in that time frame. So the heck of a long time, right? 40 years now. You get the Johnnies, they come in late, they go, I'm just going to hold that it's coming back. Market comes down, test them to see what's their breaking point. But I do think the market's going to find support here. There's no real reason for it to stay much under the 18-day average of closes. The fundamentals haven't changed. What changed is the market got overbought. What changed is the market got over the upper Bollinger Band and people didn't pay attention. How do I know? Because my emails light up. Ira, why don't you have me long in the gold market right here? Why aren't you telling me to buy it? And I'm going, because you're at the Bollinger Band. And we don't buy Bollinger Bands. Nah, you don't get it. And I get these emails. And of course, that was right here, by the way, the day before the break. And when the market went up, I'm sitting at my desk, my head's like this. I know I'm going to get some emails. Why didn't I do it? And by the way, I'm not sorry I didn't do it. I'm going to do what I think is right. You can do it. I don't manage one person's money but me. So I don't have anybody to answer to. And I want it that way. When I used to manage money and I tried it, my life was hell. I think I got gray hair when I started doing that. I'm laughing, of course, as I'm telling you this, but I hated going to work because nobody calls when you do a great job. The phones light up, the emails come in when you do something wrong. I don't need that. So I looked at it and I'm going, okay. And when it was breaking yesterday, I truly had a smile on my face. Not that I want anybody to lose, but that's what happens. So now our opportunity's around the corner here. Now the market's out of a trend, has an upside bias, a correction has taken place. Now it needs to consolidate a little bit. When we look together at where momentum is, you had been, the word is past tense. It all happened at one time. Step back with me into hell. Here's the market, and I'm telling you, this is when I'm getting the calls. I swear to you, this is when it was going on. And it started that morning, and I'm getting it, and I'm going, listen, my work says don't buy it. I'm looking at the weekly charts. I'm looking at the daily. I'm not going to do it. And of course, when it goes up, I know that they're all going, I don't know what I'm doing. And then boom, and all of a sudden now I'm the good guy again. You know that. So we're back to where silver may lose to gold. What do I teach you here? When the market is underneath the 18-day average of closes, you plot this in silver. So in your brain, you're just going, the silver market is stronger than gold. When the market closes over that number, 83.28 is the number. For the moment, it's 83.30, so I didn't bother changing the colors. When it's over it, I'll move to gold. Because as you get up here, I want to be in gold because gold's worth more money and you have to use more silver to get 1 ounce of gold. Well, that tells me I should be getting a correction in silver. And I'm getting the exact number that I want. So here is a market that is still bullish. Higher lows, right? Higher highs. Fell to the 18-day average of closes at 24.41. Big money boys, not necessarily the smaller traders like me and you, right? They're nibbling at the 24.41 area, in my opinion. They're coming in and they're saying, okay, you've got layers of support at the 200-day, and in green, the 100. This is where I want to own the market, and let's see what the market does for me. That's what I suspect they're saying. Not so in copper. In copper, the kiss of death today came when Moody's downgraded Chinese debt. The moment that happens, you're putting the pressure on China world markets for the borrowing power, or people looking to invest in China, and they bring money with them. They're going, I need more, because credit ratings set what you charge for interest. And boom, away you go. It's one of the factors. And you took the market right back down. What I don't understand is why it got up here to begin with, all right? Forget fundamentals. I don't care. I just don't understand, even as a chartist. You were embedded. You got there. What do I teach in my enhanced Bollinger Band course? For all of you that bought that course or got it for free, when you sign up for the 1-year subscription, take it. Classic. Exactly what I teach. In a classroom, this is it. You're coming out, you're embedded, you're taking half your position off, and if you lose the embedded reading, you're getting out of the other half if you're long. Platinum market never did go with anything. It's now fully bearish. Lower highs, lower lows, settled back under the 100-day average and the 18-day. You'd have to get back over 919.60 in order to negate the current downtrend, and you've opened the door for wherever the lower Bollinger Band is a possibility to get down. More likely, you're going to fight a battle for direction against the 18-day average at 915.30. In the dollar, I have been aggressively looking for a situation where the dollar lost its bearish embedded reading. It also happened, by the way, in UUP. Follow me right here. You lose the reading. This is Friday. The market should go to the 18-day average. It's the closest average, just under this. That is my goal. Will it make it? I don't know. Market starts coming up yesterday. Today's Tuesday. Kaboom. Right where it should go. You'll learn these things from me as we go through all this. And by the way, I walk you through all this every day. Every morning, I start at 5:15 like clockwork. Sometimes I'll oversleep, but it is like clockwork. And I'm doing my commentary. Now, they're not written at that point. They're all video. And I'm going to take you through and teach you this step by step as we go. I walk you through the stochastic part. I walk you through the Bollinger Band. Then I walk you through trend trading. Should we buy? Should we sell? the word we. I'm making the recommendation, you're doing the buying, okay? But we are a team. You don't have to listen to me, but I'm going to offer you specifics. I'm going to give you fundamentals. I'm going to talk to you about the chart. I'm going to introduce stop orders. I'm going to introduce momentum trades that are based purely on the momentum. And we're going to look at a whole host of weekly versus daily charts. You put it together, you get a game plan. How do you get it? I want to give you a free trial. All you need to do, and you can see free trial, go to iraepstein.com. On the top left of our website, free offers, sign up. And while there, do yourself a favor, sign up for the price counts. Super, super important. No other firm has them. Developed in-house here. I use them like clockwork. We have a short course on them, shows you how to do it. And our charting software will do this on stocks and everything else. But it gives you an idea once a trend is set in as to where the market might go with the trend. I think you'll find it fascinating. I'm Ira Epstein. Thank you for watching. I'll catch up with everybody in my next videos. And of course, first thing in the morning is we talk in the morning flash. Take care.